Whenever a war breaks out, all we see are the headlines of chaos, and rightly so, but behind the scenes, else is happening. A massive and very predictable transfer of wealth. So let's get right into the playbook that savvy investors use to handle these moments, turning what looks like a global crisis into a generational opportunity.
This isn't just some old saying. It's a pattern that we see time and time again. When fear rocks the markets, money doesn't just vanish into thin air. Nope. It moves. It flows from the hands of the panicked into the pockets of the prepared. So every crisis really creates these two paths. One is paved with reaction and loss, and the other with strategy and, opportunity. Which path you take, that's everything. Okay, so part one. The first piece of this whole playbook is just getting your head around the fundamental difference in mindset. And it's not really about how much money you start with, but how you think when it seems like everyone else is losing their cool. This slide just nails the contrast perfectly. On one side, you've got the panic-driven investor. They are glued to the news 24/7, reacting to every scary headline, every rumor they see on social media. They just follow the crowd, sell everything, and lock in those losses. But then, on the other side, you have the data-driven investor. They just mute the noise. They're busy studying the actual strength of companies, the fundamentals. And when everyone else is panic selling, they see one thing, a massive sale. And this right here really gets to the heart of it. One person sees their portfolio drop and thinks, oh my God, I have to get out before this thing goes to zero. The other person sees the exact same market drop and thinks, wow, fantastic companies are now 30% off. It is time to go shopping. That mental flip is the absolute foundation for building wealth when fear is running the show. Let's move on to part two. Because these crises, while they're all unique in the details, they tend to follow a surprisingly predictable script in the financial markets. And understanding this script, it's like having a map in the middle of a hurricane. It almost always starts with a shock, right? Some big geopolitical event that messes with a critical supply line, like the Strait of Hormuz. Something like 20% of the world's oil flows through there. This, of course, triggers panic. Oil prices spike, and that kicks off an inflation domino. Costs go up everywhere, fear floods the market, and that's when you see panicked retail investors, fueled by those scary headlines, just sell everything. That massive sell-off creates the market bottom. But here's the kicker, the recovery. It almost always starts while the news still looks absolutely terrible. So you're probably wondering, how long does all of this chaos actually last? Well, obviously every situation is different, but when you look at the historical data for these event-driven downturns, the average recovery period is about 40 to 100 days. That's it. This turns that vague advice to just be patient into a real, tangible time frame. The pain is usually sharp, but it's also often pretty short. And this is such a crucial point. When you hear the news screaming that billions or trillions of dollars were wiped out of the market, it's really misleading. That value didn't just evaporate, it was transferred. The people who sold at the bottom literally transferred their wealth to the people who were brave enough and smart enough to be buying at the bottom. Okay, so we get the mindset, we see the market pattern, now for the good stuff. Let's get into the specific, actionable playbook that legendary investors and what they call smart money use to not just survive these things, but to actually come out way ahead. It's really a four-step process. First, and honestly, this is the hardest part, ignore the noise. Just turn it off. The news is designed to get an emotional reaction out of you, not a rational one. Second, you gotta focus on the fundamentals. Ask yourself, is this conflict really gonna bankrupt this solid, profitable company 5 years from now? Probably not. Third, watch for the real signals, not what news anchors are saying, but what governments are doing. And finally, you use that info to buy when pessimism is at an absolute fever pitch. This is exactly what Warren Buffett did in 2008. The world was practically melting down, and he famously wrote an article telling everyone he was buying American stocks. And this right here, this is one of the most powerful, most counterintuitive signals you can ever learn. When you see a finance ministry or a central bank announce some huge, desperate-sounding stimulus package, what does the average person think? Wow, things must be really bad. But the smart investor thinks something totally different. They think the cavalry has arrived. They're about to flood the market with money. This is the bottom. That moment of maximum official panic, that is often the single greatest buying opportunity of the decade. All right, let's get even more practical. We've talked about the when and the how. So now let's dig into the what. When a conflict erupts, where do the opportunities typically show up? We can kind of break these opportunities down into a few main buckets. First, you have the direct beneficiaries. That's pretty obvious. Defense companies get a surge in orders. And don't forget international construction firms, because someone's got to do all the post-war rebuilding. Second, you've got economic hedges. For countries where the currency might take a hit, IT and software exporters who earn in dollars suddenly become way more profitable. Third, the classic safe havens, like gold. But here's a pro tip. Don't just blindly buy gold. Watch for the signal that central banks have started buying it up. And finally, my favorite, the beaten-down rebound plays. Sectors like autos, travel, retail, they get absolutely hammered by pessimism, but they're often the first to snap back like a rubber band when confidence starts to return. And hey, it's just as important to know what to avoid, at least in the short term. Industries that get hit directly by fear and instability, I'm talking aviation, tourism, anything related to lifestyle, parties, celebrations, it's probably best to just leave those alone until the dust settles. There'll be a time to buy them for sure, but it's not during that initial shockwave. Okay, for our last part, let's zoom out a bit, because this isn't just about surviving one crisis. The entire global landscape is shifting, and that really requires a permanent change in how we think about building and protecting our wealth for the long haul. Look, the era of relatively stable, predictable growth, it's probably behind us. We are all entering what you could call a new normal, and it's one defined by more frequent geopolitical shocks and way more market volatility. The old idea that you can just park your money in a simple index fund and watch it go up smoothly, well, that's becoming a lot less realistic. Volatility is now just part of the game. So in this new world, radical diversification isn't just a nice idea, it's absolutely essential. And I mean going way beyond just owning a few different stocks. You need to be diversified across different sectors, across different parts of the world, including emerging markets you might have ignored before, and across totally different asset types like gold or real estate. It even means looking at both public and private investments. You just do not want all of your eggs in one basket when the world is this unpredictable. And that really is the ultimate takeaway here. Nobody, and I mean nobody, can consistently predict the next crisis or what the market's going to do next week. Trying to do that is just a losing game. The goal isn't prediction, it's preparation. A disciplined strategy, a truly diversified portfolio, and the right mindset, that's what separates the people who get hurt by volatility from the people who profit from it. So, as we wrap this up, I want to leave you with this one thought. We know for a fact that another crisis will come. It is not a question of if, it is simply a question of when. The only real question you have to ask yourself is, how are you going to respond? Are you going to be glued to the news, selling in a panic? Or are you going to be ready, with a playbook in hand, ready to act with a plan? The choice, really, is yours.
How did you like this video? Please let us know in the comments. Don't forget to like, share, and subscribe to Mr. Teletube. And yes, we have made many more good videos on multiple niches. Visit the channel and enjoy the good content.